You wonder how things are trending coming into 2024. My line of the morning, though, comes from Deborah Aitken. She says this about Hermes. It's in a high luxury league of its own, delivering by far the highest quality among luxury peers. Deborah Aitken, I'm pleased to say, joins us now. Deborah, do you think this is a stock-specific story rather than an industry story when you look at these numbers this morning?
I do, in one way, and it always has been the case for Hermes. The growth rate, the 21% growth rate on the back of a year ago growth rate that it achieved, the way that it's building its earnings numbers, the way that it's focusing on that growth with new production facilities and staff, it's untouched. And we see that carrying on. And the biggest risk to Hermes is that it becomes a little bit diluted over the longer term, but for the midterm, we see that continuing. But there are companies now, what I thought this may come up. So there are some companies, if we look from the beginning of the year and the share price performances, we have anywhere from 10 to 20% share price performance positive from the LVMHs up to the Tapestries. Which is the owner of Coach, which we saw yesterday, delivered very well. So, and it's the US, so we look at what's happening, doing very, very well in the US, and that is counterbalancing what's happening still at the moment in China.
Deborah, you've touched on it, just how polarised this luxury market is at the moment. Can we just talk about pricing power? I saw a line from the executive chairman, Axel Dumas, who said that we could have price hikes of 8 to 9% on average in 2024. Who else has that pricing power?
He said that, but he won't do that. So we saw that certainly over the last couple of years, though. It had to be passed through. And those at the top end were passing that through successfully. And those shoppers out there were accepting it. So there were many over the last couple of years who had that pricing power. But now we start out with average share prices across the board in many luxury categories and across many brands, 20 to 25% higher. So that really means that you need innovation, new labels, collaborations and others further down and below Hermes. That doesn't say, though, that they don't pass pricing through of 2 to 4% this year. That would be where I would expect pricing to go.
Deborah, is there any macro trend that we can take from this, that companies that are less exposed to China or that are more exposed to a higher end kind of consumer are doing better? Is there anything at all? Or is this just silk scarves and Birkin bags that people like?
No, I think and for Hermes, it really is about exclusivity. So we stand that aside. And it really is delivering every sector, every region. And it's quite similar in terms of the growth rates and the trends there. But if I set Hermes aside, if we look at other companies, I would say actually that the US is particularly robust, and it's been better for most companies than we ever thought going into this earnings season across beauty, high end, and the high end of luxury. And we see that also even with the L'Oreal number today, where they have the US at 12%, despite a flat China market where L'Oreal outperformed with about 6%. So Europe as well. Europe is resilient. Against Europe being quite strong last year and advancing on the back of tourism, it's doing well too. So there's a lot going on brand by brand. That you mentioned at the very beginning, there are some brands such as Gucci, such as Salvatore Ferragamo and Burberry, where they're amid strategy overhaul, and that's about really getting the brand perception into the mind of the consumer as really being elevated from where it struggled previously. That's still an ongoing thing.
Deborah, Lisa talked about buy now, pay later. If I could just jump in and get a response from you on that. It felt like that for a while that was being used for the entry-level luxury items, maybe it's, say, a Gucci. Deborah, are you seeing that change, those trends change over the last 12 months?
Yes, I think in the US in particular, on the back of the voucher system and others from the year prior, we saw the US at the entry level aspirational, particularly with the fashion brands, probably trained down from about September 22. And what we've seen through the second half of this year against those easing comps the end of last year, but we've seen that has kind of evolved a year ago. And so we're actually coming out of that and we're seeing a more robust performance at entry level. And that is actually surprising for some brands. But the brands need to be really astute. They need to be in the face of the consumer. The consumer, even at the entry level, needs to feel it's personalized marketing. And you talked about marketing at the beginning of this too, and advertising spend and how we use the cash flow. L'Oreal is an absolute amazing example of this. It's taken its marketing spend from 12 to 13.3 billion this year, 32% plus of sales. And what it talks about is tech for the future. And that's how outside of Asia, it's just growing the business so profoundly well, probably 1.4 times the market rate for that company.
Interesting.
So, it's so mixed, but there are so many interesting messages out there.
Deborah, pleased to get some clarity from you. Appreciate it. Deborah Aitken there of Bloomberg Intelligence on Hermes. Her line this morning, high luxury league of its own. Bernstein, strong brand momentum. Morgan Stanley, results very solid. The stock looking pretty decent, up 4 or 5%.